Hi everyone, this is David from ABMTAX again. Today's this video topic is about how to claim your vehicle expense against your self-employment income. We always get questions from people what I could claim and how I can claim it. So we decided to make this video to speak about it. Now, usually the first question we ask people is, hey, did you ever use this vehicle for business? And if the answer is yes, then yes, you can claim this car for business. Now, obviously, this is very self-explanatory when it comes to businesses like, having a self-employment income of delivery or similar activity or Uber. But you always have to follow certain procedures to make sure it's claimed properly. But before that, we actually would like to point out that it is very advantageous, actually. Think about it. Everyone owns a car here in Canada. We are very blessed that we can afford maybe one or two vehicles. But having that self-employment income allow you to crystallize that cost. And sometimes it's very tax advantageous, depending on how you take advantage of it. So the first step is always to identify the percentage of usage. And that could be established different ways. It's basically keeping a track of your log, or you could take your reading of your odometer at the beginning of the year and the end of the year, and then figure out how many kilometers you drove in that year. And after that, usually if you're using one of the big firms, like, for doing Uber or delivery, they actually tell you how many kilometers you drove in a year. They give you actually a summary. And you can use that summary to figure out, okay, how much I use it. I use this vehicle, how many kilometers I drove to earn that self-employment income. So a quick example would be like, okay, if somebody drives a car for 10,000 kilometers at the beginning of the year, during the year, then they go back to the app and they figure out, hey, I drove the car 2,000 kilometers for doing delivery or Uber, wherever it is. And then by doing that, by knowing how many you drove it, you can take that 2,000, divided on 10,000, arrive at a 20% usage of the vehicle. So what do you do with that percentage? It's basically we use that as a way to basically carve out of your vehicle expenses against your self-employment income, or your side hustle income, if you will, that's in a layman term. So if we have a person who owns a car and a car, let's say, was $50,000, unfortunately, the government actually put a cap on that. So you only can claim up to $31,000 on a passenger vehicle. But if you think about it, if the car was brand new for that year, he can basically claim 20% of $30,000 of income, provided there's other limitations. So he can actually get a $3,000 to $4,000 tax deduction. And the reason for that, because in the first year, you're only allowed to claim half of your depreciation. So depreciation is very simple. It's like we look at a value of a car and we assume the car loses a certain percentage that's set by the government, and that percentage would be always usually 30% of the vehicle value to a maximum of 31,000. So we're going back to that person's example. If he buys a vehicle for 50,000, they're only allowed to claim 31,000 of his value. Now that means you take the 31,000, you multiply it by a set rate of depreciation, which is 30% at this point, and you arrive at a calculation of $9,000 in depreciation expense. However, because it's the first year, you only can be allowed to claim only 50% of that, which is approximately going to be around $4,500. You take that $4,500, you multiply by the percentage of the vehicle usage, you arrive at depreciation expense, or CCA expense, as Sierra like to call it, of usually around $800 to $900 or $1,000. Now, that's for the car is financed or owned. Now, if the vehicle is leased, same idea. You take, for example, the person have a lease of $500. You multiply that by 12. You arrive at $6,000. The person uses that 20% at a time, 20% usage rate. You can actually arrive at a tax deduction of $6,000 multiplied by 20% is $1,200. Now, depreciation or lease payment is not the only expense you can claim for your vehicle. You're actually can claim your insurance, your gas, and any other expenses related to the vehicle, maintenance and repair, wherever other expenses could be related to the vehicle. Now, if you think about it, it's a very advantageous thing because everybody driving a car, but because they're employed and they have restrictions, they cannot claim that vehicle. Now, if you're actually self-employed, you get the luxury to do that. And that's what I really like to call a crystallizing an expense. That expense is going to be paid anyways. You're losing money on that car because cars depreciate and not good assets. But that being said, you need them, so there's no choice. However, now because you're self-employed, you're able to use it. So we always encourage people to understand that being self-employed doesn't mean you have to pay a full tax on whatever you earn. You actually have to look at your activity and understand, hey, this kind of expense I can use it to deduct my income and then pay tax on whatever is left after that, all my deductions. So I hope this video helped you understand how to claim a vehicle, and hopefully you're going to enjoy the video, and we will be producing more videos similar to this one. Thank you.